Hey everyone, welcome back to Chipstock Investor. Today we're going to be focusing on endpoint cybersecurity company CrowdStrike.
As you probably know, this is one that we've owned since shortly after the IPO. It's been an incredibly rewarding stock, and it certainly looks like it will continue to be quite rewarding for some time. But after another really great earnings update, there's still some lingering concerns, and rightfully so, about valuation. As you're going to see from our slides here that we have to present, it's been fleshed out pretty well here. And I think there's no debate about it. Cybersecurity remains one of the top secular growth trends within the software industry right now. Casey, I know you'll be publishing a recent video we just recorded on Salesforce and UiPath as we head into this weekend. So stay tuned for that, everyone.
I'd like to remind everyone to hit that subscribe button here on YouTube. It's a free and easy way to support us here at Chipstock Investor. And of course, check out our Semiconductor Insider membership in the links below. You can join here on YouTube or over at our Ko-fi channel. That gets you access to Discord, as well as all of our video notes, show notes, and published manuals, as well as some great conversation with a great community. Check that out. It's real value at $5 a month. Okay, now let's talk about the cybersecurity industry. Cybersecurity will make up about $215 billion in annual global spend just this year, and it is expected to have an annual growth rate of around 12% for the next 5 to 7 years. And in that last video that we talked about CrowdStrike, we talked about it in the light of a rivalry with Palo Alto Networks. Both of the CEOs of these two companies, Palo Alto Networks and CrowdStrike, have definitely taken some shots at one another, but they don't offer the same cybersecurity to their customers. So there's plenty of room for both of these companies to have a very large market share in the cybersecurity industry. Palo Alto fits into that physical location and private data center and mainframes primarily. CrowdStrike focuses more on that endpoint, mobile users, frontline workers, as well as mobile devices.
And in our cybersecurity industry flow chart that we've been sharing for the last few months, you can think of this on the left-hand side as being largely legacy, or what's often referred to as legacy network security. That's hardware like firewalls that protect a physical location. And as you move further to the right, we start getting more into software. And in the middle is cloud-based services. And oftentimes investors think of cloud-based services as being no hardware. Now, that's preposterous. All software has to run on hardware, and the cloud very much an infrastructure heavy industry. But CrowdStrike is no hardware in that it doesn't actually operate any of its own infrastructure. So it's software focused. It leverages companies like Amazon, AWS to actually operate the cloud infrastructure for it. At any rate, we share this because what has been happening in recent years is as traditional network security companies expand into the cloud, and then software and especially cloud native software companies like CrowdStrike start from the right and move further to the left, these companies are starting to step on each other's toes just a little bit. So in CrowdStrike's slides as of late, they've been talking about the different services they're building on their software platform, as you can see from this chart here. And then as for specific software types that build atop CrowdStrike's original endpoint security use case. And remember, endpoint is actual mobile devices that could be anything from a laptop to a tablet, a smartphone. It could be industrial equipment that's connected to some sort of network. Whatever the case, that's the core business, and they're building these other services atop of that core endpoint product. What's happening is they're starting to step on each other's toes a bit, and Palo Alto Networks show up in a couple of these product categories that CrowdStrike likes to talk about.
Let's focus for a moment on that section in the center of this chart, the SIEM, SIEM, or Security Information and Event Management. can see a lot of different companies that fit into this space. Exabeam, Sumo Logic, Splunk is a big one that's been acquired by Cisco, as well as Logarithm. And you can see at the bottom, Palo Alto Networks. But Nick, maybe you can explain more about some of the consolidation that's been happening in this specific part of the cybersecurity industry.
Yes, this security information and event management software type is essentially a subset of data analytics software, which is a very large industry. Splunk, before it was acquired by Cisco, was doing over 4 billion in revenue. Elastic, I believe, is over 1 billion in revenue now. And a lot of these others, like you mentioned, Sumo Logic, Logarithm, Exabeam, have been taken private. This is a fiercely competitive part of the industry. And when we originally rolled out our cybersecurity industry flow early this year, we said that data analytics was a natural place for the cybersecurity industry to migrate and help consolidate because there's just way too many companies in this category, and many of them are just not all that financially viable. We've been talking a lot about that consolidation has begun.
For example, you can see these two companies, Logarithm and Exabeam, just earlier this month entered into a merger agreement. And we have spoken a lot about this company, Thoma Bravo. They own Logarithm. Thoma Bravo has been acquiring many small cybersecurity companies.
Yet Toma Bravo keeps coming up. It's going to come up again on a video that you'll hit publish on Monday as well when we talk about CyberArk and Okta. The main takeaway here, the cybersecurity industry very much involved in consolidating the data analytics software industry to itself. And CrowdStrike, very much a part of that story and generating some really fantastic growth numbers from this security information and event management category, which is part of data analytics. Now, there's some other disruption and consolidation taking place as well. You mentioned that CrowdStrike CEO George Kurtz and Palo Alto Networks CEO Nikesh Arora often sparring with each other, at least in word, on the earnings calls. Really, we would love it if those two companies just stopped talking about each other because the actual leader in cybersecurity, at least as far as revenue goes, is none other than Microsoft. It's been a while since they've revealed how much revenue they get from cybersecurity sales and distribution. The last update was January 2023, and they said that they were doing 20 billion in cybersecurity sales. There's a lot of really subpar product that Microsoft distributes. One of them is Microsoft Defender. You might be familiar with this. This is a consumer-based product, antivirus product, and identity product that CrowdStrike has been trolling, I guess you could say. And early in May, they had a new product that was announced that sort of augments Microsoft Defender to help security teams when they're trying to figure out how to protect their users that run Windows-based PCs and laptops. So a lot of stuff going on here in identity. And then also when we did the update 3 months ago on CrowdStrike, we talked about this acquisition of Flow, which is a data security posture management or DSPM startup. And if we go back to this chart here, that fits into the bottom right exposure management, where there are some other publicly traded companies in this part of the cybersecurity world as well. Qualys, Tenable, Rapid7, some smaller stocks that get a bit of attention, but CrowdStrike very much on the offensive, as is Palo Alto Networks, as they meet in the middle and kind of hack up this part of the software part of the cybersecurity industry.
Let's talk about the numbers that CrowdStrike reported for Q1, which ended in April of this year, 2024. They had a record Q1 of annualized recurring revenue at 3.65 billion, which is a 33% year-over-year growth. Operating margin of 22%, which was up 5 percentage points year-over-year, and then free cash flow up to $322 million, 42% growth year-over-year.
CrowdStrike continues to prove that they're not just a growth business, but they have the ability to ratchet up their profit margins along the way, which we've been highlighting. Hopefully this is starting to stick. This is what needs to happen in this current economic environment. Growth is fine. The market will even put up with decelerating revenue growth, but at the very least, you better have stable or rising profit margins. CrowdStrike very much delivering on that front.
Let's shift back to the outlook that they provided in their March 2024 update and see how that stacked up in this most recent quarter. Back in March, they expected a revenue year over year growth of 28 to 30%, the adjusted net income 25 to 32% year over year growth, and those shares outstanding a 2.6% year over year growth at 250 million shares. Fast forward to this most recent update as of June of this year, 2024, they increased their revenue guidance to a year over year change of 30 to 31%, increasing the adjusted net income 31 to 35%. And they did add about a million shares in shares outstanding, up to 3% increase year over year.
And the reason for that, because of employee stock-based compensation. That's a topic we've been covering since we started this channel a year and a half ago. It's just part of a technology business model. It could be a semiconductor stock. Employee stock-based compensation party started many decades ago. Definitely part of the software business model. The reason why they added about a million shares in expected total outstanding shares is as they report higher revenue, there's just naturally going to be rewards for employees that help the business grow. The main takeaway, though, is over time, as CrowdStrike matures, we do expect that stock-based compensation will gradually moderate. But if they can continue to keep those profit margins on the rise on a per share basis, CrowdStrike is still very much delivering.
They also have some lofty goals. They expect that by 2028, they will have a $10 billion annualized recurring revenue.
And along the way, higher profit margins. So this is on an adjusted basis, but adjusted operating margin targeted 28 to 32%, free cash flow margin of 34 to 38%. The GAAP metrics will slowly converge with this over the years as CrowdStrike matures as a business and those employee stock-based compensation rates moderate as a percentage of total revenue. The takeaway from this, though, is again, on a per share basis, CrowdStrike continues to grow its profitability. Per share metrics is the best way you can account for dilution. And CrowdStrike still more than offsetting that shareholder dilution, thanks in large part to the profit margin expansion.
Historically, CrowdStrike has traded at a very high premium. Let's talk about where the valuation of CrowdStrike is right now. Tell us a little bit more about that, Nick.
So this is on an enterprise value basis, which is market cap minus cash and short-term investments and plus debt. CrowdStrike very much cash and short-term investment positive net of debt, well over $3 billion in net cash and short-term investments over debt. As of after hours trading on June 4th, after CrowdStrike's update, it looks like the business is trading for about an 80 billion enterprise value. Based on that updated increased outlook for adjusted net income for this year, the stock trades for about 80 times enterprise value to adjusted net income. It's now a bit cheaper than it was 3 months ago. Not a surprise, the stock had a massive run up in 2023 as we exited the bear market. This is not a cheap stock by any means. Even though it's maybe slightly cheaper than it was 3 months ago, we think shares could largely trade sideways through this summer. That being said, we like where we're at with this position. We nibbled earlier this year. I'm not sure that we're in any position to nibble again at this point, but this is one of those stocks where if an investor feels like they want in on the long-term story, especially that target you shared in the previous slide, Casey, through calendar year 2027, 2028, if you think this business can roughly double or more its revenue in the next 3 to 5 years, let's say 5 years, this is probably a pretty decent dollar cost average candidate.
That's ultimately how we would approach it if we were trying to accumulate a position in this company right now.
Yeah, that's just us. We don't know what your particular situation is and what your portfolio looks like, how long you expect to own a business. But yeah, we still very much like CrowdStrike. It's emerged as a leader in cybersecurity pure plays alongside Palo Alto Networks, Fortinet, and a small select handful of others. And while we don't think this is a winner takes all situation in the tech world, cybersecurity very much is a winners as a group, as a type of oligopoly, a cybersecurity platform oligopoly, winners take most situation. So we continue to hold on to our positions in those top three leaders, Palo Alto Networks, Fortinet, and CrowdStrike for the long term. We think there's still a lot of opportunity for them to grow, especially as they now try to hack up some of the software parts of the security market, like data analytics, for example.
All right, that is a wrap on our take of CrowdStrike's most recent earnings. Stay tuned for more great shows coming your way. We've got Salesforce, UiPath, as well as CyberArk. Make sure you hit the subscribe button. Don't miss a video. We will be back very soon. And thank you all for listening. We'll see you again soon at Chipstock Investor.